Okay, what's going on? What's going on? So, first off, happy MLK Day. Today's stream is going to be fairly quick because we did have a shorter day when it come to actual price action inside the markets today, with it closing at 12. And if you trade, funded or let's just say top step for example, then you're going to be done pretty much at 11:45 a.m. And so what I want to go over today is just going to be the higher time frame context down to the lower time frame entry. And I think the reason being of understanding of supply demand is really key because that's how you're going to be able to pinpoint the areas of where you're trying to get in. And then also, if you're someone that trades fair value gaps or ICT or any of those type of concepts, you're going to want to start incorporating supply demand from higher time frames and understanding what to expect in specific areas of price action, as well as you want to start focusing on what's called point of interest. Now, these aren't my concepts. I didn't come up with these. These are things that I've learned over time when it comes to, different books that I've read, things like Larry Williams. So a combination of a lot of different things put together. But when you layer these things, they do help with confluence, with your selectiveness of your trades and whatnot. So over the last 2 weeks, I've had to figure out, if I want to size into the trades like I really want to, then I have to be very selective with the criteria of what I'm looking to trade. Okay. And so we'll dive right into higher time frame understanding. Now, before I get into setups or anything like that, um, I like to give myself a pre-market analysis, right? And so looking at that pre-market, if you guys look here, this is daily H4 and then our H1, and then we'll jump into some smaller time frame price action as well. Like I said, I'll go down to all the way to the 1 minute to the entry. I'll even walk you guys through the entry today that we took on Telegram, which I'll pull up here in just a second. Um, I'll walk you through the entry, through the trade management, what we could have done better, right? Because there's always ways to do better. And then what to look forward to when you're looking at like second half of the day type of situations like we're seeing today. Okay, so first off, let's go to the Telegram and look at pretty much what I had dropped before the market opened. So before the market opened, I actually didn't drop it on Telegram, but I had written it here on my own personal notes. And so what I wanted to see today was I wanted to see because of the overnight price. So if we look right here, right, overnight price on the 1 hour here, which is also, as you can see, the daily 4 hour as well. But the overnight price opened, right? Market opened 25,556. Price fell before New York Open even was a thing today, right? Price had fell from, let's just say let's round the numbers, 25 550s down to 450s, down to 350s, down to 250s. So 300 points to the downside. So what I want you to think when it comes to price, time, context, right? Because there's an understanding that you got to have of higher time frame to really bring in the context of the overall trades. Okay, and let me see if this kind of helps here, because I'm going to be looking at uh, excuse me, this window a lot more here today. Maybe my voice inflection will be a little bit better. But when you look at the price, right? Think about this when you come to your charts. If you're gonna get into a short position, okay, like if you're shorting this or you had a short from overnight, maybe from like 25,500, right, and price starts to fall in your favor, what do you have to do to get out of this trade, right? Most likely people had under the daily bar here, right? So from the daily candle of, let me kind of move this here, the daily candle of Friday the 2nd, January 2026, they put their limits, right? Their buy limits on sell side positions right under these lows, right? So right under this 4 hour low, right under this daily low, which was also right under the low of day. So let's make sure it marks on all three so you can kind of see what I'm saying. So when you put the buy limit here, right, that would have been the area. And then when you look left, you can see like how that 1 hour price would have been. But really what you're looking at is that 4 hour structural area. All right, so what you've seen today, what I like to identify this as a short covering, right? Because the only way for a sell side move to make money is for you to go in and market execute a buy position or to set a limit so that buy limit, a buy order triggers and price will get you out of the market, right, and transfer that order over to another individual who, is thinking that the market is going to buy up. So looking at this, right, this is what we're seeing today, right? So I came in, I said, okay, cool. We're already down 300 plus handles. I'd like to see at least a draw, right, on that December, on January 2nd's low. And based on this daily wick, so like this area right here and that 4-hour low, I wanted to see a draw on that liquidity before I wanted to see a buy position to go higher. Now, how does that correlate over into smaller time frame, 15-5, 1 minute setups, right? Now, when you go and you look at, and we'll move over to here, when you go over and you look at the 15-5, now you can see New York Open. Now, pre-New York Open, nobody knows what's going to happen. So let's just say price is going to look like this, right, before the New York Open, right? It's actually going to look like this, excuse me. So price looks like this. This would have been 8:15 going into 8:30 a.m. equities open. You don't really know if price is going to extend down and take that London low, right? So you have to wait for specific things to happen, and that's what I'm going to show you guys on this stream here on the 5 and the 1 minute, where I actually take all of my executions based on the higher time frame context. And so when I came into this, like I said, I had already looked at overnight price was down 300 handles. The only way for those sellers to make money was to have buy orders to start filling, or they had limits set at that 250 level, right? And so 8:30 open happens, right? 8:30 open happens, and we get what in the first 15 minutes, right? And the best trades, right? The algorithm runs with the first 15 minutes of the hour and the last, right? So like there's gonna be, so if you trade, like I said, ICT, and you trade fair value gaps, I'm gonna show you guys why it didn't come all the way back down into this what's so-called a fair value gap, right? I'm gonna explain that here in a second as well. But also I'm gonna explain to you that the macro, right? The time macro that you want to be following is based on the first 15 and last. It's not going to be 9 a.m. to 9:10, because what happens is you have a 15-minute candle still closing in that window, right? So if you only wait till 9:10, right, you're not going to really see the true price in my eyes, right? You need to be able to see that 15-minute close, that 5-minute close, right? Bam, and then know what's going to happen, okay? And so overnight price, as you can see here, had sold off, right? Get the dump. We ended up taking what? The London low, right? So this was your London low right here, right? So that was my criteria. I wanted to see, since we were already sell side, I wanted to see more sells come into the market at New York, right? Which is be people like, here's the concepts of trading, right? Everyone's heard this: buy low, sell high. So essentially you've got individuals coming into the market, right? Selling low. That's how I look at this, okay? You've got people coming in, they're selling low, and they should be focusing on looking at higher time frame context to get understanding. Now, back to just really quick, if you don't have an understanding of what to look for, right? I was told in this game that the real teachers, they don't tell you what to see, they show you where to look, right? And the only reason that they can show you where to look is because they have experience on taking setups in these specific areas. So now for me, when I'm looking at the higher time frame, and you guys know I've been talking about this level here for a while, these equal highs here, yes, I want them to deliver this, but what I'm really focused on is going to be the demand candle that's been set here on the daily and over, right? Because now you have to know what's high and what's low. Most traders just don't know what's high and what's low, right? And so when they delivered that liquidity, not only did they deliver that liquidity of that low from January 2nd, but they delivered inside of demand. So most of the time, and I would say not even most, all the time, right, you're going to see, as you start to see this more and more, that buys happen inside demand and sells happen inside supply, right? That's why we've seen last week, last Tuesday, last Wednesday, Thursday, Friday, right? Why are sells happening inside this daily bar? Because you're inside a supply area, right? And supply is going to be fit for buyers to be exiting shorts. And so same thing applies here. Price gaps down, goes right into demand, and then you start to see those limits hit, and you start to see short covering. Okay, and so that's from that higher time frame context and why we're expecting a move like this to happen. Now, very first 5-minute candle, right? I also learned a little bit about trading when we traded HFX. I don't know if you guys are very familiar with that, but it's just like time-based trading. But one of the things that you start to realize is that the body of the candles is really where the key of everything is, for the retail trader, and the wicks are really the commercial price, the bigger players. And so one thing that you'll notice in the very first 5 minutes, right, is you had a previous low here. So let's rewind this area before New York and then do this here. All right, so before New York, this is all you have. Then you have this candle here, which would have been 825 to 830, right? And then this first candle that I'm about to print here, that is the first candle of New York equities open. So 830 to 835, what do you get? You got a lower low and price action and structure, right? So now you have individuals that probably had their buy orders, and most people are buying inside the expansions. They're not buying in the demand areas because they're using their eyes to play what they can see. And so already they've already just struck people that tried to buy like 6 a.m. that had their risk at this low, right? And so that's what I love to see when we've already shorted off, right? As you can look here on the left, over 300 plus points. And so price breaks that lower low. Now, here's what you want to think about. You want to think about, as soon as they break that first low in the first 5 minutes, go ahead and let price complete, right? Let those overnight sellers get what they wanted, right, on the short side, because you need this. You need to be on the, if you're looking to buy a position, you want to be on the other side of a short covering their position, okay? And so now you can see the next 5 minute candle. So that was 830 to 835. Then you have 835 to 840. This was the special candle for me, the one that pretty much gets me locked in and ready for taking an entry, right? Because this candle, what does it do? This candle takes out traders, right? Takes out that overnight London player from 4 a.m. that had their stop loss at the low and stops them out, right? Now, this is where people on smaller time frames just start buying jackknives, but they're not waiting for the turn to be in. Now, on the previous video, I talked about the 5 minute candle showing you that sign of strength, but your eyes have to be accustomed and aware to what you're trying to see. As soon as that area of liquidity has been hit, right, for the take profit on the sell side, your eyes have to be locked in on what you're trying to see. So for me, now this comes into the first 15 minutes and last 15 minutes of the hour. And the reason really being in the first 15 minutes of the equities open is just they're just trying to really body people and get emotional traders to make decisions. So you just want to really wait until you get into that area, okay? And so we already have our higher time frame context. We know we're looking for buy positions. We've already looked at the daily and we understand that slip of liquidity is going to have limits filling. Now let's go into the 1 minute time frame and walk through the trade of what we're waiting for, okay? And so for me, when I see a position, hit, and I know that those limits are hitting, I'm going to be looking for that retracement back up to a point of interest. So now we'll kind of talk about, like I said, why didn't it fill the fair value gap, right, for the ICT traders or for the smart money concept traders or whatever, right? There's a reason why it didn't fill those areas, and it's because of how just the orders are distributed, right? So why didn't price fill back in here, and how did we find the entry? Let's go over the entry first. Okay, so now at that timing, I like to take my trades, like I said, in the first 15 minutes or last 15 minutes of an hour. And so when I see a 5 minute candle, so 840 to 845, and it closes just like this, and I see a 1 minute mitigation, I'm gonna play that setup. Okay. Now, if you want to be careful, if you want to be selective and be patient, here's what you can do. Okay. If you're taking a 5 minute area trade, you want to be inside the 5 minute demand candle, right? Because this essentially becomes a 5 minute demand, right? You want to be thinking from risk to entry. So let's just say if your location needs to be inside that 5, your order needs to be right in this area, and then you're thinking from risk, right? And I always look to have no more than a 15 to 20 handle risk on my setups, especially if you're using proper size on a trade, right? 5 contracts is $10 a point, so you're risking like $150 to $200 on this setup, okay? But you're also wanting to start thinking when you take a trade are multiple, right? And I'll kind of go over that through here. Now, what are you looking for when it comes to 5 minute? You're looking for the proper location. But what are you looking for to actually enter the trade on the 1 minute? Is going to be a shift in price delivery, and you want your positioning to be on the right side of a dump candle, right? So what am I talking about? I'm talking about this area right here, right? The bodies are closing lower, and you have this little small area right here. Now, what I'm trying to do, right, and what I ended up doing today, and I'll show you guys here in just a second, is I'm looking for a shift in price delivery on the right side of the V, right? I'm looking for, like, if this is going to be the V moment, right? The V taper type of price, I'm looking for my entry to be on the right side, and I want it to be as much as I can inside that down candle of demand, right? So if you want to condense your risk down, like I ended up getting, if you guys see here, I'll bring this over here really quick. I ended up getting the area, my entry was here, right? It may be harder to see, I'll be able to look on here, but you can see right here, I got 25,247 because right on that shift on price delivery, I entered and then I accepted the 25,236 as a risk. So essentially my entry was 247, my risk is 236, right? I've got about 11-point risk on this setup, right? Which is pretty good, right? Especially when you're using 5 contracts, it's about $100 on that risk. Now, when you're thinking in R multiples, you're thinking if price moves in your favor, so I'm going to move it down to where my actual entry was, right? 247s. When you're thinking R multiples, now you're just looking at this and you're saying, I'm looking for a 1-3R. So what you could be thinking when I said play up to point of interest is if people came in, this is just price time context and just understanding, right? If people came into the markets and they shorted, let me get back to here, sorry. And they shorted right here, right? And then they got this to deliver. What are they doing most likely? Those New York traders, right? Because if they did the exact same thing, 5 contracts sold down to here, they're up $500 on that trade, right? So what do you think they're doing? They're getting out. And what are they doing when they hit the take profit button? Buy orders are filling, okay? So if you're looking for a specific area like I was, right? Capitulation bounce here, higher time frame demand, understanding, you're looking for price to play back up to where? New York Open. And then you got to ask yourself, this is what my first mentor asked me, where are people's stop losses? So if an individual shorted in New York, this is 830 to 831, this right here, 830 to 831, you got a lower low. Where do you think an individual put their stop loss on this trade, for example? Okay, so I'm going to mark up kind of like what they probably did, because most people probably sold it here. So I'm just going to kind of do this. Most people probably sold it here and put their risk where? At the New York high, or at a psychological number, 25,300, and went down. As price started to go against them, like right in here, I'd say 849, 850, they probably start getting out, right? And start pulling that trade because they realize like, oh shit, it's getting ready to go back the other way. So on the buy side, right, I've got my criteria. I understand my higher time frame demand. I have my draw on liquidity, right? I have my framework of the probabilities that I want. Now, what I'm saying is sometimes you can find a 1 to 3 fairly quickly, right? 247 was my entry, right? Risk at the low, right? And then you're targeting right above those individuals' high. That's a 1 to 4, guys. That's a really, really, really good trade for a session, right? To be able to, grab some profits, right? But you have to be playing with the right size. You have to have the right understanding, etc. Okay. Now, how did we end up managing this trade? I'll go back to the replay mode and show it because I have specific criteria that I follow on a 5 and a 1 minute execution window to get in and out of trades, right? And if you can see here, I basically got into the trade. Then I explained that my target was 25,350s. I talk about where I trailed here at 906, right? And then our trailed was delivered for I think about 70 handles on the day, okay? And so let's go to the replay mode here really quickly. All right, so we're right here. This is what we're seeing, right? We're starting to see that shift. I'm not going to go into volume as well because that would go a little crazy, but there is also keys to stuff with volume. Now let's say you took your trade right in here, okay? And let me move this really quickly to this side here. Left monitor. Let's do it up here, okay? Okay, so now make sure it's over there. Okay, cool. So now we have our trade, right? We had 5 contracts. We had our stop loss at the low of day, right? So we had about 100-point risk because it was about 11 handles, right? 245, I got in at 247s. And then our TP was the 350s, right? So if you look at a 1 minute here, right, our TP was just above these where they came up. They created some resistance inside those 340s. They created some more resistance again, and then they fell off, okay? And so our TP was in that area. Now, as price starts to move in your favor, you have to understand what you're going to do as as the market makes money available for you, okay? And so price starts to move in our favor immediately, right? Which is not always going to happen, but when it does, it's great. And so now we're starting to read price on the 5 minute and the 15 and the 1, okay? And I'm looking at like higher time frame on this side and the 15.5 usually in my middle. And so 8:45 to 8:50, so this would have been right here, 47, 48, 49, right? And then 50. Now, what you want to do, and here's how I think about management, okay? What I'm willing to risk over time, right? Not one trade is going to make you rich, but over time, doing the right things over and over is what's going to make you profitable, okay? And so what you're looking at here is if you have a 1 to 2 R, this is when I start thinking about management of my trade, okay? And so either you can trail your risk at a 1 to 2 right here, because you're clearly, I don't know if this, hope this is showing up clear enough. You're clearly at a 1 to 2 here. So at least what you can do is either move your stop and profit or be break even, okay? And so like what I do in this situation, what I like to do is I like to, when a 5-minute bar closes, so this one right here, 50 to 55, and then right here on the 1 minute we're at 50, we're gonna go 51, 52, 53, 54, right? And then 55. At this exact moment, if you're not already, and I needed to move it to break even when we had that last bar, but we already should be break even. And then when this 5-minute candle closes, right? So this is 50 to 55, you can use now that 5-minute low as your risk, right? So like right in this area. So basically where I'm pointing to really quick so you guys can see. So it's going to be right here in this area, right? Or right here. This is the one that aligns with the 5-minute. So it's going to be right here. So if you want, right, to go ahead and secure profits and you're using a little bit more size on your trades, then you're going to go ahead and secure this area here. Because if price comes back down, at least you've secured the bag on the day. And then there's a mantra I want you guys to remember is protect or pay yourself at point of interest, right? So price moved in our favor, right? We're floating 477 in profit, but let's not think about profit. Let's think R multiples, okay? R multiple, we're thinking 1 to 3, 1 to 5, and I mean, if you can get a 1 to 10 out of a setup, that's really crazy because you got to think about over time if you continue that going forward. So like right now, you're floating, right, about a 1 to 5 R multiple, and you have secured, right, about a 1 to like a 1.5, right? So now here's another thing I like to do if you're keeping everything very tight and 5-minute price is still continuing in your favor, closing bullish candles, is I like to identify down candles on my execution window, which is my 1 minute, down candles in an uptrending market. So do we have a down candle in an uptrending market? Yes, right here, right? So what you can essentially do is go ahead and trail your risk, because we're thinking of R multiples, up to the down candle in the uptrending market, right, which would be here, right? And then this, so you guys can see on the R multiple. And now you have a 1 to 3 locked off at that point of interest, right? So when people see, on the 5-minute, this would have been the next 5-minute candle here, 55 to 9, and like right here on the 1 minute, we're at 55 going into 9. You've already secured a 1 to 3. You're letting the market work now, okay? And that's the type of setups I like to see. Now, as price continues to move in our favor and we have that 1 to 3 locked, price continues to make more room for us to, or makes more money available for us to secure. And then my eyes are just drawn on price action and body candle closures on the 5-minute. Because now, as you can see here on the 5-minute, you guys see how the line graph, how it's closing higher right here, 25,332, right? When that happens, that's what's called a break of structure, right? Inside that break of structure, that's where people are losing trades. That's where people are starting to get frantic, etc., right? But also, every time a 5-minute candle opens and closes, right, and then a new candle opens, you can start to utilize that low, right, to trail your risk. Now, when we started to close up a little bit higher going into 9, so this would have been 57, 58, 59, so like 1 minute here before. Now, at this point, because we're moving so fast in our favor and price is shooting back up, it seems as if, right, when you look at like a 15.5, pull this back over here too. When you look at like a 15.5 here, you can tell that the overnight shorts are really starting to cover here, right? We've already gotten a 15-minute engulfing candle here. All right, so this 15-minute 8:45 into 9 is already engulfed, and there's a demand set. So what I'm looking at when it comes to that smaller time frame is you already have a 1 to 3 R secured. If you want to, right, you can go ahead and trail risk, right, to, let me move this, sorry, let me go back here. I'm trying to move this. You can move this to where? Point of interest, because people are looking for fair value gaps and all this other stuff to fill, but what price is doing is majority of players are playing at the point of interest, so they're going to come back and test that same area, and that's where, like I said, you can trail your risk to be more secure. So let's just say hypothetically you did that. Me personally, what I ended up doing was I ended up waiting for the 9 to 9:05 candle to close, and then I started to see weakness, and then that's when I trailed my risk up to New York, okay? And so this would have been 9, okay, so this is 8:59, so 9 a.m., 9:01, 9:02, 9:03, 9:04, and then we have 9:05. Now, one thing I want you to pay attention to, right? Do you have a down candle in the uptrending market? You do, right? And I learned this from Lance Breinstein, so this isn't my stuff. This is from an individual that has made $60 million in a month that explains this stuff, okay? So now that you have that new down candle in the uptrending market, you could go ahead and trail your risk up and secure a 1 to 7 R multiple, right? If you want to see what it looks like in, P&L, right? That's a pretty good day, right? $680 secured, and you're just waiting on price to either break structure and go higher than 350s and deliver your target. Because that's the one thing about trading is, like, yeah, we wanted those 350s to deliver, but your target's not always going to deliver, right? And so once we got that 5-minute break of structure, you can anticipate, right? At break of structures, you can write this down. You can anticipate when body candles are closing like that and structures breaking, that price could retrace back into the range as individuals like myself or other small time price action players, even smaller than 1 minute, 100 tick players, etc., or traders that have way bigger accounts with bigger size. They're going to see this as an act for them to get out or to trail the risk or to execute some kind of way, right? Because they need to secure the bag, right? And so that's what we ended up seeing here. I ended up trailing my risk to 25,313s, right? And so you can see that right here when I talked about this in Telegram. I literally said here, 9:06 a.m. I'm trailing my risk, right, to trailing my risk to 25,313s, 9:06 a.m. So right at this moment right here, right, let me pull this down here, right, this would have been at 9:06 a.m. So what did I do? I trailed my risk to where? 25,313s to secure that 1 to 7 R multiple, right? And what did price end up doing? I'm waiting for it to go deliver through that liquidity pocket there. Price comes back down, right? And yes, like, well, why wouldn't you close it up here? Da, 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 da. Because that's not how my rules are set up, okay? And then bam, what do you get here? Price delivers, it gets kind of close, right? Bam, and then it delivers your 1 to 7. Now, people are like, well, why doesn't it come back after it delivers your liquidity like this? And that's a beautiful trade, right? Like that, to me, that's a beautiful trade. Maybe you don't always get the high of day, etc., stuff like that. But then it falls back into the range. Now, this is something I was taught a long time ago too. This is called scoops. Just kind of it may help you like identify the current range you're trading, right? Is as that price starts to move back into this area, it's not about if it's going to respect the imbalance really as much. Like, it definitely can go into that area, but I guarantee you guys, if you guys go back and watch, right, if you go back and you look at price action here and you start to study point of interest, look at the response from 920 to 925. Price fails to go lower, and then what happens at point of interest again? Buyers step back into the market, right? And so when I seen this was more of a it solidified to me that, okay, good thing we, trailed our risk, we got our bag, but I could see in my eyes going into, since we had a shorter day as well, that we were going to see some more upside price, right? Now, as it bounces off that area, buyers hold support 25,300s, and then what's left behind? Because people don't believe in supply demand, it doesn't make any sense, because you need supply demand to have edge, right? So this candle right here now becomes a demand candle that's set in alignment with a psychological number, whole level, right? 25,300. And so what I start to develop and see on a 15.5 is that, can I see edge, right? And I like to frame my trades up on a 15 5-minute 1-minute basis, okay? And so when you're looking at this, you're like, okay, well, that's about a 20 handle risk. And remember, like I said, think from risk to entry, okay? So about 20 handles inside that 5-minute area, and you're just looking to still deliver the target. Like say you took another trade, it's starting to hold inside the 5-minute demand, hold support inside the 25,300s. Now, first 15 minutes of the hour, last 15 minutes of the hour, right? Now, if you start to look, right, if you go here, this is 940, 945, it's still respecting that demand. And then you have a sign of strength here, 955, right? It's kind of hard to see sometimes, but it does close higher than that previous bar, right? Stacking demand, right? 955 going into 10, right? And then from 10 to 10:05, you get the shift in price delivery, right? So what I'm looking for here, like if I would have still had a little runner on this trade, essentially what I'm looking for here is something like, is something like this, right? Is when that candle closes higher, right? Because I know from looking at a lot of charts over time, right, on a line graph, that price is breaking structure and going higher, and that's a sign of strength for a bullish position, right? And you want to see things like that, right? You want to see price, you know, building like this, right, making higher highs, higher lows essentially, and then to be able to go higher. It's stagnating, it's consolidating, but when you're looking at a 5-minute and you're looking at 1-minute and 15 altogether, you're seeing the demand set. It's pretty easy to see once you're looking at higher time frame context as well, and then reading the 1-minute price at the right time. And so let's say you took another setup in here and you're looking to play on the right side of a dump candle, right? They draw on liquidity here, 955, they start to close higher. And like I said, I like to play inside a shift in price deliveries, but when I play inside that shift in price delivery, I want to make sure that I have what's called 5-minute location. So start to play right here as that price is starting to go higher here, right? And then you have the 5-minute bar here is your risk, 20 handle risk, right? Prior bar low is a good risk. And then you're starting to attack up, looking left on the overnight liquidity, and I like to use half levels, whole levels, etc. Okay, and so I personally wouldn't have taken a trade up here at this point just because I had already taken the other trade. But I will say, like I said, this would have been a really good setup as well to continue on up, right? Now, like I said, for the fair value gap, I know people like to look at that area. It never even came back to that area. The reason why that is, I believe, right, is because of trailing risk, right? And I don't want to go into volume and where orders sit and book maps and all that stuff. But once they couldn't close under that point of interest New York, which is very common and redundant, it happens over and over, essentially the individuals that had a runner left from that first buy that we talked about in that higher time frame demand, they're trailing their risk based on a rule to this area here. Price never delivered that area. Price ended up closing higher. And then I would have used the last down candle in the uptrending market, right? Because that's what I do on 5, 1 minute, etc. I would have used this area now from when I had risk to go here as soon as price started closing its bodies like this here. Okay? And so that's what I believe was happening, right? Is they just didn't trigger the trailing risk traders. They didn't come back of a deep enough retracement right in here to end up triggering those individuals, right? And so you kind of have to have an idea of like higher time frame 15.5 and what you know, premium and discount is. But when you're looking at just this little small range to continue higher here, price failed to close below the 50% of the range, right? So if you look at it from like this perspective here, right, from that low to here, price couldn't close bodies below that 50%, which is showing me signs of strength even at the same time of point of interest, that we're going to probably see price continue higher in that situation. And so, like I said, it all starts though, right? When you're looking at all this, it all starts from the higher time frame demand, because everything is fractal inside the markets, right? Everything is fractal. You're going to get the same pretty much print on the lower time frame if you have understanding of what you're looking for and where you're at on that higher time frame. But like I said, how we ended up managing this, we ended up taking those 247s. We had down candles and uptrending markets on the way up. We wanted 350s to deliver. Price came back and hit us for that area. Now, here's the thing you can do as well. You can have 5 contracts on here, or, you know, let's just say 2 contract system. And what you can do is you can see that same price movement trail one contract, leave one break even, and then now you're able to manage that into the end of the day. But like I said, I wasn't going to do that. I just wanted to secure the bag because I knew we were going to be closing a little bit earlier today. And so I hope that kind of helps out with understanding like a capitulation. When you guys hear me say capitulation, bounce play, out of demand, higher time frame, I hope that makes sense, because now it's going to come down to the first 15. If you want to like condense down your criteria, it's going to come down to those first 15 minutes of the hour or the last. Usually the first 15 minutes of the equities open is just a bloodbath, right? They're going to just destroy people. And what's crazy is when I go online, I see in those first 15 minutes, maybe you're scrolling Instagram or whatever, you're seeing people, right, short a position like this and get out here, great trade, whatever. But you got to understand the location of, buy low, sell high. They're selling low. The reason why they're getting out of that and the price is rocketing so fast is because so many people were already short from overnight, and then they're shorting this area just to kind of collapse this liquidity of this area here. And when they hit that take profit button and they go online, they show everyone on Instagram that they made a bag, etc. By the time they do that, they missed the big move of the day, right? Believe me, I used to do it all the time and be wondering why the price is up 300 handles by the end of the day. And so go back over this, study the timing, study how you're going to frame your entry, think in R multiples, think in risk reward and probabilities, right? Because I'm going to drop a video that just goes over, if you took 10 trades, 100 trades, etc., and you frame them up the specific way that I'm showing, it doesn't really matter how good of a trader you are. It's how can you actually frame the trade up every time and what you're willing to risk, right? You're thinking in that R multiple to get back, right? And so looking at a little bit higher time frame here from what I'm expecting going into tomorrow, right? Because we're going to open back up here at 5 p.m. Central Time Zone, is we had a massive gap, right, from Friday's price. So 25,680s, we had a gap down to, where our market open is. That's about 125 handles. So I would think from that previous day high, right, like as of Friday's high, to our new low currently that we have now, that we're going to retrace at least 50% of that gap area. So if you want to use a GAN box, use the wick low of this area and then measure it from here to here. And I would start to look at, those 25,600s up to like 650 areas. I'm going to check the chat here real quick. The fact that we didn't retrace 50% of that range was showing strength. Of course, yeah, 100%. Are you talking about like on the smaller time frame? That alone to me was exactly the same thing. That's how I pretty much look at it as well. It's like when you're looking at body closures of candles, like this candle is here, and then you have the rally up. You see how it rallies, but then it closes higher than this area. On a line graph, it's easier to see, right? That's a clear break of structure and a higher high, right? That's a clear sign that most individuals that shorted, for one, that New York, their stop losses was probably at 25.3, or if they're if they're not using size, right, they're using a smaller size, and they're probably putting their risk at that prior bar, which is 25,350s. Yeah, and that's why I said it's like you really want to be using the proper size on the trade, because then you're not going to want to take profit or trail risk if you're not doing that. And sometimes, like what I've learned, but especially trading NQ, is you don't really need much, and you don't really want to have that much time under tension to where you're susceptible to risk and making mistakes. But I do think, like, when you look at a continuation with price failing to, like, if you look at price action structure here on that 5 minute on the left, without price doing this, right, like if it would have done maybe something like this, bounced up like it did here, and then we went and extended lower, right, like that would have been, to me, like lower low, lower high, lower low. Now that New York low, right, becomes a target in my eyes in that situation if price would have printed in that specific manner, right? But since it didn't, and then it set that demand right here with that 5 minute candle, now as I'm looking at 1 minute price, all I'm looking at is structure, right? You had this area here, price closed higher, and now we're starting to hold like that, right? And so now it just continues to hold, and you really want to watch like the body candle closures, right? Because that's actually a higher low based on the body candle closures, and that's those signs as well inside of a 5 minute demand that I know that, like, wick areas, a 5-minute wick is a 1-minute dump. So as long as that 1-minute dump candle, the bodies aren't closing lower than these previous ones, that's a higher low, if that makes sense. I'm gonna look at it really quick. I just not trusting price because of holiday, but doing that pump. Yeah, and so this is another thing me and one of my good business partners was talking about this morning, is I have 3 years of data, of screenshots and like MLK breakdowns. And I will say this, for the last 3 years, if you go back and look at MLK Day, the price buys up every time. So this is 3 for 3 right now of 200 almost point buy positions on MLK Day for equities open. Now, if you go back and like I said, you go back here and you look at the overnight, right? You could have, potentially made a massive profit on that sell side down, but I'm not as versed in that overnight. I like to use the overnight players' liquidity in my favor in my equities open positions. And so I still think, like, when you're looking at this area here, like if you're trying to frame up, R multiple and, still keep your edge, I still think a 5-minute position right here by using that demand candle, then at the right time, right, thinking from risk to entry, like I said, 20 handle risk would look like this. You're entering on that 1 minute, like somewhere in here, like in that, probably those 320 levels, and then targeting up to at least the 400 supply area. Like I really want them to deliver, even a little bit higher here, right? So if you're looking at price, I want them to deliver up into those 480s. But like you said, like with it being MLK Day, like and we have a shorter day, I didn't see very much of a push more than this 450 level is what I really wanted, like 450 to like wherever this area here. What is this? 470s. So I didn't really see that much more of a push than there. But like going into tomorrow, like I was saying, if we continue to hold, right, this area going into tomorrow, so let's kind of like see what it would look like here, right? So this will be tomorrow's end of day, essentially. Now, as you can see on a 1 hour and 15, that Sunday gap, right? That fill looks, going above market open seems very doable, right? It seems like based on the price, and then if you go look at like a 4 hour, right? You got a 4 hour draw on liquidity, and then you have 1 hour bars closing that strong. It seems like they could essentially continue to stack these 15 5-minute down candles to continue higher up to 25,500, maybe even 25,600. So let's see here. So yeah, I hope that kind of helps understand like why we took that. If you're not in the free Telegram, join the free Telegram on the Profit Capital. But I look forward to the rest of the week. We're just trying to, finish out these last, 10 days of this month, first month of 2026 with a positive note, and just really lock in on our executions on the plan and, plan our trade and trade our plan, right? And so beautiful price action. Like I said, if you're reading the higher time frame like daily demand, right? 4 hour draw on liquidity, and understanding that the context, right? Because if you're short over 25 550s down to 450, 350, 250, you're up 300 handles. I would hope that you're starting to take some profits on a position like that. So I appreciate you guys watching. We'll be back again for a trade review, most likely tomorrow. And then we will be back potentially to some live trades in February. But right now I'm just really focusing on, my system, making sure I'm sizing into the trades right, making sure I have proper selection. So that way when we come on and we're working together in a live environment, that we're executing in the proper manner that we want. So I appreciate you guys watching, and if you guys have any questions, just DM me, and have a good rest of your day.